Zero collateral. Zero collateral. So many may use this to bridge a gap of possibly a payroll or just anything that you need, even just to help you keep the doors open. Check this one out.
Well, because this core rate pricing is so low in pricing, there's a lot of benefits. Even a prepayment discount, even a inventory discount is significant. So let's say, as an example, you were going to buy $100,000 worth of inventory, or you're going to buy 50, and they said, hey, if you buy 100, we'll give you 25% off. You only have to pay us 75 grand to get $100,000 in inventory. You go, what? But I don't have the 75. And you come to us and we say, we can get you 75 at a price of 1.2. 1.2 times 75, that'd be 15,000 in interest. So 75 plus 15 is 90,000. It would cost you over 12 months. And you're getting $100,000 in inventory now. So we fund the inventory discount, and the discount is greater than the cost of capital. It's a good use of funds. You get terms on your inventory and you get a huge discount. That's why this company exists, because I had someone offer me a huge inventory discount in a bottling product. I had a juice bottling company, and I didn't have the money to take advantage of the inventory discount. The bank wouldn't help me, but that gives an example of how core rate can be used because the pricing is so low. Now, the approval amounts are just generally $50,000 to $250,000. The approximate approval amount is 1 to 2 times your current monthly sales, your lowest monthly sales in the last 90 days. So as an example, if the business is doing $50,000 a month, or their lowest was 50, they'd get approved for $50,000 to $100,000. Now, of course, it could be lower if they already have an advance, or they have an average daily balance that's lower than usual, or they have some negative bank days, but that's generally 1 to 2 times monthly sales. Now, what can help? Frequency of deposits. If you got more than just a handful of deposits a month, like everyday credit card sales are being deposited in, or you got just more deposits, right? That lowers the risk that revenue could go away. So high numbers of deposits helps, not just dollar amount, but frequency of deposits. What hurts? How about NSFs? Having a lot of, or even some, negative banking days, bouncing checks, or having zero balance, below zero. And your average daily balance helps or hurts. So this just gives you an example of the things that are looked at. Your payment history earns you more, or add-on funds, or renewals at better pricing once you have history with our providers as well. The requirements are a little more difficult than our flex rate funding. It's $15,000 a monthly revenue. That's the same. The ideal, though, here is $50,000. But you need a 680 FICO score rather than in the flex rate. You can be down in the 500s. You need to be in business 2 years rather than just 6 months like flex rate. Minimal NSFs, of course. Now, we always try to get the core rate product, but sometimes people aren't eligible for it. Now, if you want longer terms over a year, you're going to need to be doing $100,000 a month minimum in your lowest month, $100,000, and have a 700 FICO score. That's what allows you to get longer terms, more than just 12 months. Okay. Now, with this, we have 2 different products. What they boil down to is the price you agree to and the prepayment discount if you pay it off early. This can be huge. We have the first option, 25% prepayment discount, where whatever interest you owe, if you pay it off early, you get a discount of 25% off whatever interest is still owed. You get a lower price, see 1.15 to 1.25, terms up to 18 months. Option 2, though, 100% prepayment discount. Check that out. Now, you're agreeing to a higher price, 1.22 to 1.32. However, if you pay it off early, you get 100% discount on your interest, and you can do up to 24 months now on that. What do you mean 25% discount, 100% discount? I'm a little confused. We understand. Let me give you a quick example. In this scenario, let's assume the business owner got approved for $100,000 and they agreed to pay 1.28 back. They're going to pay back $128,000 over 12 months, let's say. And let's say they've paid on it now for 2 months and they choose to pay off the remaining balance because they came into some money and they want to get it paid off. Well, in scenario setup for both examples, the 25% discount or the 100%, here's what it looks like. They got $100,000. They agreed to pay back $128 over 12 months. The payment, $128 divided by 52 weeks, because their weekly payments is $24.61 a week. And then they pay that for 8 weeks. So after 8 weeks, they've paid 8 payments of $24.61, which means they've paid $19,692. The remaining balance, remember, they agreed to pay back $128 128 minus 19.6 is 108,000 is what their current balance is. So if they wanted to pay it off early now, they owe 108, right? But we get them discounts for paying it off early. A bank may charge them a fee to pay it off early. We're going to get them a discount to pay it off early, right? Here's how it works. On a 25% prepayment discount, what that means is you're still required to pay all your remaining principal, all of that, but any unpaid interest is discounted by 25%. So they won't owe the full 108. They're going to get a discount. How much? Well, the remaining interest of that 28,000 they agreed to pay up front. They've paid 4,300 in interest so far. You don't have to know how, but of those first eight-week payments, 4,300 of it was interest. So the remaining interest they owe is $23,000. So you apply the 25% discount to the 23,000. That means $5,900 is going to come off as a discount to the total balance owed. All right. So the discounted interest to pay is 23,000 that you still owed minus the 5,900. So you only have to pay 17,000 in interest instead of the full 23,000. Okay. Remaining principal, you've paid 15,000 so far. You owe 84,000, Mrs. Business Owner. So you owe the 84,000 principal plus the discounted interest of 17 equals 102. So on the left there, you see how it says 108? That's what they really owe based on what they agreed. If they pay it out over the term of the loan, they're going to pay 108. But because they're paying it off early, they don't pay a penalty to pay it off early. They actually get a discount and they only pay 102 to pay it off early. Now that's with 25% prepayment. What about 100% prepayment? Okay, look at this. Same scenario. They must pay only the unpaid principal, though. Any interest they owe is waived completely. It's forgiven immediately. So remaining principal is 100,000 minus the 15 they've already paid is 84,000. Now, if they choose to pay it off after 8 weeks, they only owe $84,000. The interest of $23,000 completely forgiven, 100% discount. The payoff amount is $84,615. So look at that. On the left, they agreed to pay 108, but they only got to pay 84 because they're paying it off after 8 weeks. They owe 84 more. They've already made some payments, of course.
There's 6 out of 10 business owners out there who are the rock stars. Good morning, guys. I'm super fired up today. I've been having a really good morning, really fired up, got a lot of energy flowing through me. So I wanted to bring that to you guys today in the huddle, but I'm going to get right into it. Why we're here, right? There's 6 out of 10 business owners out there who are the rock stars. They're making it happen. They support our community. So, this is the why, right? We're here to serve them back. They're serving our communities. They're the ones that are leading the front line of capitalism. They're the ones that, create the restaurants we go eat at. They're the ones that have the landscaping companies that are out and, till tireless hours at night. So just remember why we're here, to offer that tool, that life vest to them, right? If or when they need it. Working capital, to most business owners is a struggle to find. And until you reach that lending handout and we put the Bank Breezy funding platform in front of them, give them that opportunity, right, to push their business forward, whether that's growth, whether that's getting them out of a pinch, whatever it may be, that is the backbone of how we operate, right? Why we're here.